Okay, buying and selling. What does buying and selling look like in the market? Most of you would actually have these questions and you would want to know like what does it look like in the market? So if because Forex trading, the only two direction you can or the only two ways you can make money is either you're buying or you're selling, right? So we talked about it in the previous videos. Now Uh, I'll teach you some of the terminologies that we use in FX. So, the term buy, usually they call it long, and the term sell, they call it short. So, when a currency value is expected to rise, you would want to place a buy order, or you would want to go long. And when the currency value is expected to fall, you would want to place a sell order or you would want to go short. So other terminologies they use for this is bulls. Buys are referred to as bulls. Bears are referred to as sells. So the idea behind it is that a bull, when it's attacking, it attacks with its horn from down to up. You get so it picks up. If you've ever gone to these shows where they have a guy holding a red cloth and trying to sway the bull to come one direction. So usually some of those shows usually turn out to be a chaotic show. So what happens is the bull starts attacking other people. So and if you notice how it attacks, it picks up the people and takes them up. You get so that's why they call it a bull, or they call the bears bulls. And the bears attack you from up to down. So it has to stand up and pound on you. So pounding on you has to bring you down. You get so while a bull is taking you up, the bears are taking you down. So these are just terminologies or words used to understand or to hear the market or to get to. These are terminologies. They're just basic terminologies in the market. So you could hear from other when you're watching videos on YouTube, Instagram about traders talking about trades. You would hear bullish markets, bearish markets. So it's just the same thing. So bullish market means a buy market or a market that is going long, or bearish market means a sell market that is going short. Okay. So that's just basically what it is. It says, so buyers in the market cause exchange rate value to rise as demand increases. You get. So remember we talked about this thing when we were talking about exchange rates. We talked about this. So the more a product is demanded for, once demand increase on that product, the price of the product gets to increase, which is the exchange rate gets to increase. So the same thing that happens in this market as well. So exchange rate gets to increase over time. You understand? It gets to increase over time as demand increases. So sellers also cause exchange rate to fall as demand of the currency decreases. So it's just basic understanding. So the market movement happens due to balancing acts of supply and demand. Okay, so now this is how it looks like overall. Now, this is how a buy market looks like. You see market going all the way from here to this point, all the way from here to this point. Let me see if I can have a notification. Okay, spotlight. Yeah, the spotlight is small, but it's okay. So you see market going all the way from here to this point. So that's how the bullish market is. It has a lot of ups, but overall, it's all going up. If you notice here as well, market is coming down all the way down. Then here, the same thing, all the way down. So it's just an example. Same thing here, markets going up. So this is a bullish market. This side became a bearish market, bullish market, bearish market. So we'll talk about the different types of trend later when we talk about market structure. We'll talk about trend, all right? So follow me while we delve deep into this. So there are words like overbought, which is best time to sell, and oversold, best time to buy. So it means when market has gone so deep, it is the best time to start buying it because the price is so low. So a lot of people could use indicators, but I don't trade indicators necessarily. I actually don't. So a lot of people could use indicators like MACD, RSI to indicate when market has been oversold, something like this. Yeah. But then I actually don't trade indicators, so I wouldn't do that. So strong up or downtrend can cause market to be struck in overbought, to be stuck in overbought or oversold for an extended period of time. So it just means market could still be making a strong uptrend, like it's still going up. The trend is both sell, candle, buy, is also both selling and buying, but overall it is moving up. So that's why they call it an uptrend. It could have a downtrend, just like where you see this here. Again, market overall is going down, but we have other little pushes above to go up, but overall it's been going down. You get, so that's why they call it trend. So this is a downtrend. This is an example of an uptrend. All right. So what it means is a strong uptrend, yeah, could make markets stay or get stuck in an overbought position, but and also the case is reversed too for oversold. All right. So one advice, do not fight the trend. So always trade in line with the trend. It's a safer place to be. Okay, so that is it for this video. Now you understand what overbought and oversold looks like. So I'll see you guys on the next video. Don't forget to subscribe, like, and turn on your bell notification. If you have questions or you need to ask for a clarification, drop a comment. I'll always be on the comment section to reply. All right. So see you guys in the next video. Bye.